Good morning. Here are the headlines for today. AM Best affirms credit ratings of Caribbean Alliance Insurance Company Limited. British Virgin Islands removed from EU Blacklist after tax reforms. World Bank recommends more investment in digital technology in Latin America and the Caribbean. AM Best has affirmed the financial strength rating of A Excellence and the long-term issuer credit rating of A Excellence of Caribbean Alliance Insurance Company Limited (CIC) Antigua and Barbuda. The ratings reflect CIC's balance sheet strength, which AM Best assesses as strongest, as well as its strong operating performance, neutral business profile, and appropriate enterprise risk management. CIC maintains the strongest level of risk-adjusted capitalization supported by consistent earnings generation, a highly liquid investment portfolio, and a conservative reinsurance structure to protect against catastrophe losses. CIC has higher dependence on reinsurance than peers because of low retention levels. However, this risk is mitigated using diverse reinsurance panels and high credit quality partners. Overall, CIC has generated consistently positive operating income, and combined ratio historically has compared favorable to its Caribbean peers. To read more on this article, go to businesswire.com. The British Virgin Islands has been removed from the European Union's EU blacklist of non-cooperative tax jurisdictions. The BVI is now listed as a jurisdiction that cooperates with the EU and has pending commitments to improve its tax compliance and reporting regime. In a statement yesterday, the EU said the BVI was upgraded after it amended its framework on exchange of information on request. The BVI was added to the blacklist Annex 1 on February 14th, along with Costa Rica, Marshall Islands, and Russia. The BVI will be reassessed accordingly to the Organization for Economic Cooperation and Development (OECD) standard, and its status could be improved again, the EU added. To read more on this article by Dylan D. Shong, go to Caribbean.loopnews.com. The World Bank has urged governments in Latin America and the Caribbean to look at boosting investment in digital technology in a bid to increase productivity and revenues. Chief Economist in charge of Latin America and the Caribbean at the World Bank, William Maloney, says these investments could also facilitate fiscal flexibility by reducing costs. Through the use of e-procurement and better targeting of social programs, we can reduce government expenditures, he said, sharing a World Bank estimate that somewhere around 4% of GDP in our countries is not well used by the governments. It could also assist in raising more revenues and help reduce costs of compliance for tax evasions, he said. To read more on this article, go to RadioJamaicaOnline.com. This was your Caribinvest headline news to start your day. Bonjour.